Hello everyone, this is Noah McIntosh from McIntosh & Associates Financial with an educational economic update for July of 2019. In this month's video, we'll discuss some of the recent headlines that influenced June's stock prices and also provide some perspective on what these developments may mean in the coming months. Please stay tuned at the end of the video for the required disclosure statement. After a disappointing May, U.S. stock markets roared back in June. The S&P 500 picked up 6.9%. The Dow Jones Industrial Average rose 7.2%, and the Nasdaq Composite gained 7.4%. During the month, the S&P 500 reached a record high, while the Dow Industrials and the Nasdaq Composite came within a whisper of historical peaks. So what fueled this rally? Well, two factors: optimism over a potential interest rate cut by the Federal Reserve, and a growing belief that the U.S. and China are actively working to solve out their tariff dispute. Stock prices opened the month lower, but soon climbed on hopes that the Fed would cut short-term rates. News that the U.S. would not impose further tariffs on Mexican imports also helped the rally. Stocks lost a bit of momentum due to escalating tensions in the Middle East, only to rise again on the news of President Trump's positive phone call with China's president. Wall Street, however, finished the month with mixed results, as all eyes turned to the G20 summit. While markets applauded the progress on trade, attention in June shifted to the Federal Reserve and what's next for short-term interest rates. The Fed kept the federal funds rate unchanged at its June two-day meeting, followed by a dovish statement indicating that it would take appropriate actions to sustain economic growth. Since markets have already assumed a future rate cut is inevitable, the potential for volatility may increase if the Fed continues to hold steady on rates. That's why this month we'll be watching the Fed closely for any signals that may send investors. Remember, the market's recent rise has been partially driven by the anticipation of a federal rate cut. If the Fed were to suggest that a rate adjustment is not in the immediate offing, the market may find itself repricing stocks to reflect changing expectations. Well, that's it for this month's educational economic update. Once again, this is Noah McIntosh with McIntosh & Associates Financial, signing off for the month of June 2019. Please remember, nothing we state here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 989-692-2200. Again, it's 989-692-2200, and be happy to talk with you. For the required disclosure statement, while we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investing does involve risk, including potential of loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining markets. The indices mentioned are unmanaged and cannot be invested directly. Past performance does not guarantee future results. Have a great month. We'll talk to you soon. Bye-bye.